Are you looking for down payment assistance, but you're running into this problem? You've owned a home before, or you earn more money than is allowed on most of the programs out there. Well, thankfully, the Minnesota Housing Finance Agency has a program called the Step Up Loan. And with this program, it can help you in both of those circumstances by allowing you to buy a home with conventional FHA, VA, or USDA financing through the state of Minnesota, and you've owned a home before, you currently own a home, or your income is higher than what most of the programs qualify for. That's exactly what this Step Up program is designed for. I'm going to show you how you can buy a house with as little as $1,000 cash out of pocket using the Step Up loan from the Minnesota Housing Finance Agency. Hey, I'm Peter Lindquist. Been a mortgage lender in the state of Minnesota for over 30 years. If you like today's video, give it a thumbs up and subscribe to the channel. So MHFA, Minnesota Housing Finance Agency, has two main first mortgage programs. One is called Startup, and the other one is called Step Up. Startup is designed around first-time home buyers, and it's generally preferred if you're a first-time home buyer because the interest rate is slightly lower than the next program I'll tell you about, the Step Up program. But you have to be a first-time home buyer if you're going to use the Startup program. And the income limits for that program are considerably more conservative than for the Step Up program. So the Step Up program can be used with a down payment assistance program called the monthly payment loan. I'll put a link in the description below to my video on that program. But that can literally allow you to buy a home with as little as $1,000 by using the $14,000 down payment assistance, and usually in combination with requesting seller-paid closing costs to get it as low as possible if you want to get it that low to $1,000. The income limits are really interesting. Now these change for year to year. It's $197,000 for the Step Up program. But, under most circumstances, you're not using the Step Up program unless you're using the monthly payment loan. Monthly payment loan has a more conservative maximum income limit that is $139,000 for a household of two people. Now, that compares favorably to the Startup program, which has an income limit of $132,000, but the down payment assistance program you want with the Startup program called the deferred payment loan, that's $85,000. So there's a big gap between $85,000 and $139,000. But one of the big keys here, and this is especially true for those borrowers that have just run into earning more money than the maximum income limits, but not having enough money for a down payment. And that is that they count qualifying income. It's very different from the Startup program and almost all down payment assistance programs, which count household income. So it's the borrower on the loan and other people in the household as well. Step Up program is very different. It's qualifying income. And that can be used to help in many different circumstances. Let me give you an example. You earn $110,000 and your spouse earns $200,000. So you earn a lot of money, but you need down payment assistance. I had a couple in this situation. They had to sell their home at a big loss, so they used all of the money that they had available on that. And so we used the qualifying income, which was the spouse that earned less money than the maximum income limit. So that spouse earned, let's say, $110,000. And we didn't count the spouse's income who earned the $200,000. So that doesn't necessarily mean the spouse couldn't be on the loan. If you qualify with one of those incomes, let's say it's the one for $110,000, we can just not verify the other borrower's income. So we can have you both on the loan if you want to be, as long as you qualify on one of the incomes that is less than the monthly payment loan program that requires. So the biggest two reasons that we're using that is that you've sold your house and buying another one, or you just make too much money to qualify for the Startup program. Then you can opt for the Step Up program. Even though it's designed for move-up buyers, there is an exception process that allows you as a first-time home buyer to access that simply because of the maximum income limits. One other feature that is very interesting here is that let's say that you own a home currently and you really want to rent that house out. You've got a low interest rate of 3% interest and you want to go buy another one. If you qualify for buying the next home, but you don't have enough money in the bank, then we use the monthly payment loan in that situation for that borrower to go buy their next home. And meanwhile, you're renting out your old one. It's a great way to make use of that low 3% interest that you've got on the old house and renting that out and creating a stream of income. And now you've borrowed money, so you buy the next home for $1,000 out of pocket. I want to make a caveat that doesn't work if your old house is an MHFA loan. Can't do that. Can only have one MHFA loan at a time. The step-up program is not ideal for first-time home buyers. The interest rate on it is a little bit higher. It's usually an 8% higher than what the step-up or than what the startup program is. If you're in that unique situation of having owned a home or earned too much money, the step-up program is there for you, and it is fit to solve many situations for my borrowers. Thanks for taking the time to be with me today talking about the Step Up program from the Minnesota Housing Finance Agency. Look forward to seeing you next time.